Welcome to my channel. Today we're going to be talking about Churchill Capital, ticker symbol CCIV, and their rumored merger with Lucid Motors. Lucid Motors is a private startup that makes luxury electric vehicles, and they have stated that they want to go public. To do so, they may need a SPAC, which stands for Special Purpose Acquisition Company. Also known as blank check companies, a SPAC raises capital through an initial public offering for the purpose of acquiring an existing company. There seems to be evidence that Churchill Capital will be that SPAC to merge with Lucid Motors. One potential piece of evidence that Churchill Capital is going to be the SPAC to merge with Lucid is that Andrew Liveris not only serves as Lucid's chairman, but also as an operating partner at Churchill Capital. Since Lucid is private, we can't exactly look at their financials, but as this LA Times article points out, back in 2018, Lucid was near death and desperate for cash, and Saudi Arabia's sovereign wealth fund invested $1.3 billion in them. And now the Saudi fund and Lucid's founders are looking to really get started and take advantage of SPACs, also known as shell companies. Over here on the Motley Fool, what originally started the rumor was Bloomberg reporting talks between Lucid Motors and Churchill Capital, indicating a transaction that could be valued at up to $15 billion. Looking at the chart for CCIV, we can see that it's been at the $9–10 range for quite a while. Then at the beginning of January, it started to pump up some on some news of big investors, firms buying into CCIV. Here we have it around 24.9. People taking profit, speculating. Went up to 32. Around this time, I think it was on the 1st or 2nd of February, there was news that they were saying the merger was not going to be imminent. Doesn't mean it's not going to be a great stock long term. That merger is most likely going to happen at some point, near future probably. On the 2nd, it went all the way up to 34.80. Down some, went back up to 32 on the 5th, all the way up to 35.40 on Friday, February 5th. It closed at 34.65 at market close February 5th. It's not showing on Yahoo Finance CCIV's income statement or balance sheet. You can see that 52-week range of 960 to 36, which is pretty much the same as in the last month and a half. And they have a market cap of $8.9 billion. As we can see on the Fintel for DuPont Capital Management's filings, in December 31st, 2020, they purchased over 500,000 shares of CCIV. Now, Andrew Liveris is the director and executive chairman of Dow DuPont. He's also on the board of directors for Lucid Motors, and he's also an operating partner for Churchill Capital. This says they bought 14 million shares of CCIV on December 31st. I don't know if this article has their numbers right, but I guess that could make it even more significant. Here we have CCIV's management and their operating partners, which of course includes Andrew Liveris, connection to Lucid Motors. Here we have the Lucid Air, starting at about $70,000, 1,080 horsepower, has a max projected range of 517 miles. The Air Dream, the Air Grand Touring, Air Touring and Air Pure. Video presentation of the Lucid Air. Let's talk some more about Lucid Motors. On this Seeking Alpha article, they point out how they have completed their first stage construction on their manufacturing plant, and that they focus on maximizing efficiency. Their Lucid Motors CEO and CTO, Peter Rawlinson, was the former vice president of engineering at Tesla and chief engineer of the Model S. Lucid boasts a 14% energy efficiency lead over Tesla, allowing them to travel further on a smaller battery. Batteries are the single most expensive component of an EV, not to mention incredibly heavy, so reducing their size without compromising range is a constant goal of electric vehicle manufacturers. And the weight reduction also helps improve efficiency as well. Comparing the Lucid Air to the Model S, for example, the Lucid Air gets a roughly 4.6 miles per kilowatt hour, while the Model S currently gets 4.1 miles per kilowatt hour. With an EPA estimated range of 517 miles, the Lucid Air was set to beat Tesla's Model S in energy efficiency. However, Tesla recently released new versions of the Model S with a variant capable of up to 520 miles on a single charge. But Lucid believes they will be able to up the range of their production vehicle to 553.5 miles. This would mean efficiency of 4.9 miles per kilowatt hour and a 19.5% increase of efficiency over Tesla. Leading these efficiency gains is Lucid's Powertrain technology. They use permanent magnet synchronous motors in their vehicle just like Tesla, but has claimed massive improvements to the cooling abilities of the internal wiring. They call the technology an axial jet cooling manifold. When the wires heat up, they are more resistant to the flow of electrons, and therefore more power is required to achieve the desired rotational velocity. So their cooling system will reduce the adverse effect quite dramatically. Here's their integrated electric motor, inverter, and transmission drive unit. Looking at the interior cabin of the car, Lucid is looking to improve on the driving experience with its own advanced driver assist system they're calling Lucid Dream Drive. And their sensor suite will include LiDAR. In total, the vehicle will come with 32 different sensors. I don't know if, amongst other companies, if they're going to be trying to acquire Microvision or use Microvision's LiDAR technology. That plays into this yet. Personally, I have 13 shares of Microvision from when they were at around the $7 range. I'd like to get more, even if it's a bit higher. Over here on Car and Driver, looking at the battery, which has a capacity of 113 kilowatt hours. If for some reason it's announced that Churchill is not going to merge with Lucid Motors, it's been theorized that the shares will easily fall down close to around the $10 range, somewhere between there and the $20 range, as a lot of people will probably take profit, and a lot of those people will probably enter back in at a lower price. Certainly some long-term investors are not going to sell, or maybe they'll take profit on roughly half their shares. I, amongst everyone else that's talking about this, are convinced that there is going to be a merger. We just don't know how soon. The CEOs and board of directors are not allowed to actually talk about it until that merger is finalized and announced. As always, I am not a financial advisor. This is strictly for entertainment purposes. Always do your due diligence. Should probably get yourself some CCIV or wait and see if it drops some down in price. After there's a merger, no matter what the share price is, I'm sure that it'll keep going up long term. Thank you so much for watching. Don't forget to like and subscribe. Have a great day.